interesting. For the first time, the 15-year depreciation schedule also applies to qualified retail improvements. What impact has this change had on your industry? And even in the current economic climate, are more retailers undertaking construction projects?
That's a good question. It has had a positive impact. I actually was recently talking with a small business member in Montana who is putting in a $1.5 million improvement to the retail store that they own as a result of this provision, and actually looking to maybe improve. They've got a total of 3 stores. There are other 2 stores down the line. Unfortunately, that would probably be something they'd have to do in 2010, and cost is going to be a factor. And if the cost goes back up to 39 years, that's going to be very difficult to do in these times. I will tell you, though, that when I talk to the vast majority of our retail members, they have canceled whatever plans they could cancel for projects in 2009 because of their very slim earnings or loss situations. As you know, with all businesses, but especially retail sales have been down so much that the businesses really are cutting back everything that's not essential. Now, that builds up more pent-up demand for improvements that must be made and that they are trying very hard to be able to make in 2010, at least to put some more of those projects on the line. Cost is going to be critical, and if the cost is, if they can only depreciate 1/39th of the cost a year, which is virtually nothing, then it's going to make a big difference.
Let me ask you, has this provision been used in concert with bonus depreciation and 179 expensing?
I don't think that you can't use the 179 expensing, I don't think, for the same exact, property. I don't think you can double, that would be a double benefit.
Okay.
So I do believe that the leasehold improvement did qualify for bonus depreciation, though.
Okay. Thank you. Mr. Friends, IRS Commissioner Schulman recently said that he expects to see a record number of tax refund requests. And this jump can be attributed to the Recovery Act provisions that allow small firms to carry back losses. Have restaurants been taking advantage of that provision, and has it helped them survive for the last 12 months?
Yes, especially in this economic times. You can be operating for many years. The restaurant industry, you've heard before, our median bottom line, our median percentage is 3 to 5%. It's very low compared to other industries because there's so much competition. You can be doing fine for years. You get in tough economic times. The manufacturing facility in your area gets shut down or laid off, and all of a sudden your business drops down, and you're on such a thin margin. All of a sudden, boom. You're in that provision or in that situation where you've got to decide whether to talk to the employees. Either you need to reduce hours, so you have to. Everyone, do you want to just take a little reduction in hours, or we're going to have to lay some people off? What do you want to do? You work with them on that, but then the bottom line comes negative, and if you've got that where you can carry back, this is what they're talking about. The carry back, that means that's taxes you paid on income. You can't get any more than that than what you've already paid. It's just allowing that credit to be, or that deficit to be carried back. And yes, it's very important, especially in these economic times. You can't operate, in the red all the time or you're out of business. In these situations when business gets tough, if you have that possibility, it really helps out. And it is used.
Ms. Dwyer-Owens, this committee has always been very concerned about helping those veterans from the Iraq and Afghanistan wars, including provisions on the small business lending programs under SBA that we specifically instructed to be in place for returning veterans. Can you talk to us about what is so uniquely about returning veterans that help them succeed as becoming small business owners?
Yeah, especially as it relates to franchising. You know, franchising is a set of systems. So in the military, they're trained to follow systems. So it's a perfect fit. And they're also disciplined. You know, so we find that franchisees who come into our businesses that have that strong discipline to follow systems do very well in business. So they've got strong ethics. They've again been trained to have strong ethics in business. So it's a perfect fit for franchising. And I have not heard of many of them getting benefits from the SBA.
Well,
I should only speak for my franchisees. I
Sure.
shouldn't speak for others. My own franchisees are having a terrible time, even those that are veterans, getting help.
I guess that, I don't know if any person here is from SBA, but that is a story that we hear not only for veterans, but other small businesses. And we are working very hard to make sure that the sensitivity is there, because
We
this is the
appreciate that.
time to make sure that the assistance is provided. As we look at moving a tax bill, one revenue offset that some have talked about is changing the taxation rules for carried interest. How would changing the tax rate for such interest impact private equity investment in your industry, and how will this impact private equity investment?
I think it'd be a big challenge. You know, entrepreneurs are the ones really driving the economy, from my perspective. And in my own personal situation, I have a private equity owner. And I would tell you that with certainty that today we would not be where we are as an organization without the help of this private equity owner, because we finance our franchise fees. So we will have a record year in new unit sales for our franchise companies because we finance in-house, and we would not be doing that without the support of our private equity partner. So this is not the time, from my perspective, to make that kind of a change.
Mr. Ferrazzi, in your statement, you stated that if the biodiesel tax incentives is not extended, production in the U.S. will stop completely. Have you made any analysis as to how many jobs we stand to lose if we don't extend that tax credit?
Thanks for that question, because that really does kind of highlight the importance of extending the tax incentive and not letting there be a lapse. Right now, the U.S. biodiesel industry supports directly and indirectly approximately 52,000 jobs in the United States. And if you think about how the tax incentive is structured, what it does is it makes the fuel price competitive with diesel fuel. So absent that incentive, the fuel is selling at a premium to diesel fuel, and the fuels business in general is a very high volume, low margin business. So if you have that much of a disparity in the price, it's going to be hard to move any product in the marketplace and get contracts. You put that in tandem with the fact that there's not the renewable fuel standards not yet in place. I don't think it's being alarmist to say that you would see a production in the United States come to a screeching halt.
In order to give your industry certainty, the extension should be for how long? 2 years? 5 years?
What you see in the legislation that I mentioned in my testimony is calling for a 5-year extension. And if you look back to the Recovery Act, you had similar length duration extensions for wind and other Section 45 tax incentives. And the idea is the same. You want to provide that certainty and reliability to businesses so they can make planning decisions, to the investment community so that you can have capital come in to continue to grow the business.
Mr. Hall, I heard your case, that you make your case on AMT, but I would like to ask you, what other tax policy should we be looking at to encourage entrepreneurship among the self-employed?
I think consistent with some of the other panelists, small business continues to have issues with access to credit. So whether they're financing restaurant equipment or they're financing a franchise fee, whatever they're challenged with, whether they're a veteran or just like me, still finding access to invest in their new idea, their new effort, their contribution to the economy is still difficult. And when I look at the bonus depreciation items, Section 179 limits, the recovery periods that Mr. French talked about, all those things seem to be tax comments or tax issues, but I view those as credit issues as well. Because as Mr. French said also, that I agree with, those issues really are just timing issues. They don't increase the deduction or the expense of an item over time. It just puts the small business in a position position of more readily financing their new idea. And again, it's my belief that's where the economic recovery comes from. That's where the jobs come from. And so having access to those tax incentives help with the credit issue as much as having better rates at the bank even.
Thank you. Now I recognize Mr. Bright.